Just wanted to begin by saying so many of you in the audience here have heard that the job really begins and the clock is really ticking once you get listed. And shortly after that, you obviously have to make sure that the items that are authorized are in the right stores, at the right price, in the set, and before you can really start to activate. And while there are many ways to invest in building your brand, the most efficient way is often the way that's closest to the consumer, and that includes retail merchandising. So we have a terrific group here today to provide a lot of insights, and we're going to talk about some best practices, lessons learned, and how you can really put this to work to support your business. But before we dive in, let's do that quick poll, Carol. Or whenever you're ready. Okay, while we're waiting on that for a moment, let me start by asking George. You're with a leading industry merchandising company. Maybe you can start by giving us an idea of what are some of the range of services that merchandising companies provide for brands.
Thank you. First of all, thank you very much, the Brands Food Organization. And I want to say that I'm here to learn also from our founders and from you, Bob. This industry is changing constantly. Every day as we talk, there are brands out there that are thinking new ways in order to go and capture the attention of the consumer in the store, right? Everyone's fighting for attention in the store. And that's one of the most expensive commodities you can get in our days. So merchandising is all about winning at the shelf, having your product available to the consumer, make the journey as easy for the consumer to locate your product, understand what is of your product, right? And then, of course, convert them on the spot into a customer, and then finally ring the product at the shelf. Of course, you all understand that the most difficult part, let's say that your brand has the right packaging, it has the right messaging, a great offering. So it will be easy for the brand to convert the consumer. The thing is, how do we get the brand at the shelf and available to them and also pop up from the crowd? So what do we call it is the last 100 feet in the store, from the truck all the way at the shelf. So can you rely on the store personnel to do that? Unfortunately, the retailers are not in the business of restocking your product. It's kind of more on the business of real estate. Your product needs to be there. So the question is, who can help you with that? And that's where the merchandising services are getting into the play, and they help the brand to make it from the shelf, from the back room all the way to the shelf. Of course, there is other ways that the brand can be supported, right? We just talk about the point of sale, but after that is being achieved, then we have to discuss about velocity. How do we incentivize trial? How do we help the consumer to try the product, come closer to it, and then give it a shot? So both aspects of point of sale and velocity of your product can be supported by merchandising, by the people being in the store, making sure you win at the shelf.
And so can you go a little further in terms of, for our listeners, as they think about engaging with a merchandising company, what should they be planning on in terms of, say, budget, in terms of, I realize there's different services, they probably come at different prices, but if you can maybe provide a range of things, specific things that you might do, and then if it's a price per store, what are some of the other factors they should include so they can think about this in terms of the mix?
Absolutely. I think, and I'm not here, guys, to steer you to one direction, but here at Trax, we do things a little bit different, but I will tell you what the industry overall does, right? We have kind of our model is more about correlating the ROI. So in order to have the return on your investment, you need to have a unit economics. Usually for us, the unit economic is the store visit. So now, as we enter into a store, you will be able to know what I fixed. And after that, you will be able to see, okay, I fixed 2 voids. That means my product being 2 SKUs being at the shelf multiple the number of units I sell from this SKU, I know that this visit was able to bring me X dollars back. So right now you can easily correlate that. So the ROI will be easier to track by having a cost per visit. Of course, out there are different models. There are merchandising companies that are able to get paid by using a retainer. They will be paid as a percentage of your sale. They will be able to get paid, as I mentioned, by the visit. Overall, I think it's important for any new brand out there or existing brand to decide how they want to organize the business. Many of the brands say, this is my tier 1 accounts. I want to have these accounts, the Whole Foods of the world, the Sprouts of the world, to be my showroom. I need to be absolutely perfect there. I need to drive constant sales because I'm going to demonstrate my success in these accounts into my tier 2 and tier 3 accounts that are going to help me to get activated there. So now you can see that in some channels, you have to invest a little bit more in order to drive that results that you maybe have to present also to your investors, not only to other buyers, right? Another way that you can see that, and I believe is also very important, is a percentage of your sales, right? You have to be careful about what can I drive at the store level or at the account level. So then I can decide like a 2%, 3%, 5% of my sales can be allocated to merchandising. And of course, it goes down to what I say, monitoring how this spend drives your sales. That's how I would say is the best way to approach the merchandising budget. But I can dig into more afterwards as we're having the conversation.
That sounds great. And, before we move on, one thing that I missed on is maybe Diana, you can tell us a little bit about yourself and your brand, and then Billal can do the same.
Sure. So I'm the founder, CEO, co-owner of Undercover Snacks, and we have a product that's crispy quinoa, lightly covered in premium chocolate. They're chocolate quinoa crisps, and we, the genesis behind the brand is I had 2 daughters with celiac disease, and I wanted to come out with a product that was cleaner, healthier, and gluten-free. And I started by mixing ingredients in my kitchen, came up with a product, and I probably did a lot of what you guys packaged it. I made it myself, packaged it myself, brought it to the store myself, demoed it, got it on shelf. And in 5 years now, I'm in about 20,000 stores. We've had products on United Airlines, and we've grown substantially, and we manufacture and have our own factory.
That's great. And Billal?
Hi, I'm Billal. I'm the CEO and co-founder of Bolani, and we also started in our kitchen making flatbreads and sauces, and we sold them at farmers markets. And we actually grew the business from there to multiple farmers markets to almost like 80 farmers markets a week. And then we ventured into retail later. And we are now 4 years into it, and we have grown to about 1,000 stores, and we're in a lot of distribution, some Costco, some Targets, stuff like that.
Excellent. Excellent. And so how have you guys, maybe Diana, go first. How have you approached merchandising, for your brand? Have you used merchandising companies like Trax? Have you used your brokers, your own people, brand ambassadors? How have you approached that?
I've sort of gone at things a million different ways. So when I first started, we started out in one Whole Foods in Newark, New Jersey, and quickly I was authorized throughout the Whole Foods in the Northeast. But I had to succeed at those Whole Foods. And so from the get-go, when I got into Whole Foods, initially it was just me, and then I'd go to every store and I'd check everything. When that got to be too much, I hired a regional merchandiser who went into the stores weekly because I absolutely had to succeed there. We went into another region of Whole Foods and the same kind of thing happened. And then it sort of got out of control. I tried regionally to kind of continue to do that with merchandising, and it quickly got too expensive, got too hard to manage, even for me managing the people who were doing the merchandising. And we sort of grew haphazardly, and I lost track of it. And so I went from that point to having brokers and working with brokers who, to various degrees of success, have gone in, some brokers are better than others, have gone in and sort of tried to help with that. And the truth is, it's sort of something I have to revisit constantly and come up with different ways to do it, because it's, now that we're this big, it's really, really hard to manage, and it's almost impossible to afford and to figure it out. And also my product sells at a really relatively low price point. And so to get the ROIs on my product for merchandising is a little bit tricky to figure out when I'm sort of outside of my top tier stores.
Got it. And Billal, you're going to be a little different in that you're refrigerated and perishable. And so how about you? How have you approached this?
So kind of similar to Diana, I started in Whole Foods, and I used to deliver myself. So I'd load it in the coolers, and then I got a cooler truck, and then it just became kind of out of control. I had like 10 trucks. I was distributing myself, and went from there to like move to a Tony's, which is a like UNFI, and they started distributing it. And then, we thought, oh, life is going to be easy. We're just going to go merchandise it now. So, and then quickly finding out when you're stuck in traffic, trying to go from store to store, this is not feasible. And then we looked for same type of thing, brokers. Some are better than others, and but brokers, they specialize in getting you into the shelf. They're not really specialists on keeping you on the shelf. They can do things with promos and stuff that might help, but if the product's not on the shelf, none of that's going to matter. And then I went from there to a regional merchandiser, which are retainers, and they have their months, and some good, some bad, and it's not consistent. And then I found Trax, and I've worked with other kind of merchandisers that have worked, but as soon as I've worked with them, they kind of turn into like they want to be a broker, and it wants to become a different type of relationship. I think with Trax, what's been really good for me is it's just very straightforward, and the reports are really easy to understand, and it gives me like a good perspective instead of someone just sends me a picture and says, oh yeah, it was good, the store is shelved. Like, I think Trax does a good job of giving different questions and answers to give me a better picture of what's going on.
Got it. So both of you are really close to your business, and I'd like to hear a little more specifically, when you think about merchandising, how much of it is what you would think of as like being on a spot basis? Like, I just got into this new account, I want to make sure the tags are up, or, hey, I'm looking at my Whole Foods portal data, it looks like we have an out of stock issue and we need to fix a problem, versus how much of it is part of your ongoing everyday mix of things you're doing?
I would say for me, it's just, I'm doing so many things and there's only so many minutes in a day. There's certain accounts that I'm super hyper focused on, that I have to win at those accounts. I mean, I'll track those just like crazy and make sure, and I'll get on the broker, and we do purchase data, we purchase spins data. I can see certain things that way. There are certain retailers I can see better than others, like we're in Kroger, enterprise wide. I can see the voids there. I can have places like Publix. I can have my broker run void reports, and I can see where we are in the store there. And then and those are just such important retailers for us that I'll jump on it and I'll figure out a way to deal with it. But I don't have a great I don't have a great solution yet. It's really sketchy.
Got it. And Billal?
I kind of have the same thing. I don't have a great solution either, but I will say one thing that's kind of ongoing problem that I'm always facing with at the store level is that we sell bread and we sell sauce, and getting the store to merchandising it together is very difficult because one is in a different category and one is in a different category, but they obviously sell good together. But just kind of working with a merchandiser to help them realize that at a store level. I mean, a lot of times when the merchandiser goes there, they don't even know it's the same company. They're just like, oh, I thought that was like pesto. I just put that with like the ravioli stuff. And, they don't even know what I'm selling half the time. So it's like also product knowledge. So having a merchandiser explain to them kind of like, oh, this is a filled flatbread. It's not just pita bread or a pizza or a Hot Pocket or whatever many ideas I've heard over the years of what it is. So.
Well, this is a good transition. what I want to do is ask each of you, what are some examples of, a great merchandising effort that was really a game changer for your business? And, how would you think about that in terms of a successful outcome?
I mean, when I first started and I was sort of more focused on hiring somebody for merchandising, they were able to go in at that point to Whole Foods and they were able to get me off shelf displays. And I don't know if you can do that anymore. I mean, Whole Foods has changed so much in the last couple of years, but 4 or 5 years ago, I could send my merchandiser would go in there and suddenly I had a display on top of the salad bar. And you get a display in Manhattan salad bars, and those are game changers. I mean, people really see them and they go crazy over them. But I don't think there's a lot of retailers, and there's some retailers, certainly the smaller retailers, absolutely you can do that at, but I think the larger ones, it's probably harder now to do that. They're more, and I think it's harder now to do that at Whole Foods. But to the extent that your merchandiser can go in there and get you secondary placement just by showing up is huge.
That's great. And George, how much of your team, when they go into stores, is it a matter of asking for forgiveness later instead of permission now, and where they might just use their charm and charisma at with the person in the store to get that secondary placement, or do creative things like Billal mentioned, pairing things that belong together that is ultimately better for the retailer. But if you went through proper channels, it would take 6 months.
That's a great question. Also, I want to say something that when you have a new innovative product, you're trying to create a new category, that's where merchandising becomes like a huge thing in the store, because you have to identify what is the right category, what's the right placement in the store, how you do it right. Definitely charisma and everything plays a role, but I do believe that the store managers and buyers in the store need to be educated about the product. So number one, you have to explain them what you sell, and then you have to inform them. You have to go in with data and facts that can make them, they're business people. They want to drive their sales up. If you go and tell them, if you put me right there, you're going to see 3 times the velocity by everybody else in the category, they're going to take it and put it there immediately. Right? Because they want to go also, even in stores like Whole Foods, where they have like very tight planograms, if you walk into the store with data and with facts that they're going to make money for them, they're going to follow you. You cannot just be there as another body. You have to be there as a businessman or woman, discuss about them and tell them, this is how it's going to be successful for all of us. It's a win-win. And I want to, in order to do that, you have to use technology, because you cannot walk in 20 stores in a day and knowing from the top of your head what's to be the right assortment, what's the right placement, how you're going to make them successful. That's what we do differently here. We empower them with our app that has all this information. So when you walk in, you get your memo about the store. You know what discussion you need to have with the store personnel. And I think that is key.
And just to stay on that for a minute, this is, as much for my own curiosity and understanding, is when one of your folks go into a store, how many brands are they typically touching? And are they in different departments? Is it, dairy, grocery, frozen, bakery, et cetera? And how many can they realistically do at a high level?
It was a very important decision that we made as a company, that every brand has different needs. And it's very difficult to stack these needs. So for some retailers, that brands have the same needs, we can go in and represent 5, 6 brands at a time. But for many other brands that we have out there, their needs are different. The frequency of the visits required are different. The buyers that you need to discuss are different. So we can walk into the store and we can represent one brand at a time. So we have the best of both worlds, I can call it. And we will decide with our account managers what is the most appropriate for the brand. And at the end of the day, some brands, they will say, I need that immediately, and I want my brand to be represented independently because I have the need. And some other brands will say, something, I can join forces with another brand that they have the same needs with me, or they have like slightly different needs or totally different needs, but I can follow their frequency and the stores that they follow. So I would say the answer is both.
And so I heard you in terms of having a data story, being business people, but do you also carry around some swag, those beautiful, Patagonia fleece vests and t-shirts and gloves, or even samples of the product to give the people working in the store a chance to taste the products they're putting on the shelf?
Yeah. So you have to be in that game. First of all, because the people that work in the store, they're going to be your brand ambassadors 24/7, right? They are there, right? So we had different campaigns where we're going, to example, to ShopRites, that they have dietitians into the stores, and we were giving them kits to educate them so they can educate afterwards the consumers, right? So we can go in and give swag, give like information, materials, coupons. We have our reps buying the product and give it to the managers to try it on the spot, or to people around the cooler when they shop, or around the freezer. So we're trying to be very creative with our teams, and we're trying to minimize the gap between the consumer and the product, and the store personnel and the product.
Got it. And Billal, how about an example of some creative merchandising you did that got great results for you?
Yeah, I think when we got into Myers, we started out with like about 30 stores. And at first, the velocity was going pretty good. But once we got merchandisers onto the set, we quickly realized why it's not going as well, because a lot of stores didn't even have the product on the shelf. But as the merchandising came, now we just got expanded into another 70 stores. So I think that has shown me, I mean, in the early days, I can tell quite a few, but it was myself walking in Whole Foods, meeting another Whole Foods store manager. And then, they were like, oh, we should carry you too. But I had to unlock the stores myself back then. But I think as you go into a merchandising company, it's really important to partner with someone that's to set the set to your standard and how you want it, and how you want it to look. And like Diana said, getting double placements for me, sometimes they can place the pesto with the bread, but also it's good because it's vegan. It could be with the pasta sauces too. So getting double placement can also be an effective way to grow ROI.
That's great. I mean, a couple things I'll share is when I've had spins speak at my seminars that I put on, they'll talk about an elasticity index based on the amount of promotional allowance you're offering. And an example might be, 4% of lift for every 1% of discount. So if you're doing 15% off, you might get upwards of 60% lift. But when you do an off-shelf display, it might be 3 or 4x the results. So it's unbelievable in terms of getting that, additional placement. And years ago, I was on the board of a cocktail mixer company called Stirrings, and we made these, premium mixers. We had great distribution and a lot of premium retailers, et cetera. And one of the things we did was we didn't want to discount excessively. We didn't want to devalue the brand in any way. But when we would go into stores, we would offer what we would call a display allowance. So instead of putting the product on promotion and discounting the price, we would get that secondary placement in the cheese department, during holiday time, or we'd get a permanent, off-shelf displays year-round in certain retailers in exchange for giving them 10% off all the time. And we got fantastic results for that were really good. So I'm going to go back to George for a few minutes. And, you mentioned, smartly deploying merchandising based on good data, right? So it's efficient, good results, good ROI. And so for a lot of the brands who are listening in today, what kind of data is best, and what tools might be available, especially to earlier stage companies with limited resources, so that you can provide the most value to them? And are there any sort of hacks or innovative ways of approaching this?
we have to be innovative, at least in your early stages. But I would say do not hesitate to invest in data even very early. Could sound expensive, but it pays off in the future as you build in your brand. I'll give you some examples about how data even can help with what you mentioned earlier. Imagine that you have done an IRC campaign, right? You want to monitor what was the success of this IRC campaign. Having your sales
Can you
data,
just please explain for those who haven't heard that term before?
yeah. So basically, guys, and imagine you have like some coupons that they are redeemable. Whatever you see in the products, $1 off, 50 cents off, right? So why are we using them? We're using them to drive the velocity. So lower the barrier for the consumer to purchase my product. So if we deploy teams to go in the store and put up like 50 of these stickers, this is money. That's $50, right? If it's $1 off each of them, that means you're gonna have to pay $50 back to the retailer. The question is, how do you measure the impact of that? Do we have returning customers after that? So you need a partner that will be able to help you with that. Now, let's go back to what you said. Where did you get this data? So there is like basically three major sets of data. The first data is what we call scan data or sales data. The scan data can come from vendors like Spins data, as Diana mentioned earlier, or Nielsen as you're getting like bigger, or they can come directly from the retailers. Whole Foods, Target, Walmart, Kroger, they offer daily data of how much you sell in every store that you have your product, or how much you don't sell, so that you turn to see that what store is supposed to have the product and don't have. So that's one set of data. The second set of data you can have is from your distributors. Some distributors can provide you with data of how many units or cases or pallets they distribute to certain distribution centers, to certain retailers, or down to the store. So now you know that if a distributor distribute to the store, that means that the store is moving products. So at least you can utilize that to be able to monitor that. And the third pillar is the data that Trax can provide you, or any other merchandise, or your in-house reps. As our founders here mentioned, you go into the store, you collect data. Like, where am I? I have 4 facings, I'm in stock with these SKUs, I'm out of stock with that, I need to get an order, right? So we can provide you all the placement data that we call, which basically where you are placed, how many facings, what assortment, if you're in stock or out of stock. But the question is, what do you do with this data? You can keep collecting tons and tons of data, but you need to utilize them in order to drive that. So our teams are doing the following. They're trying to tell you now, okay, how much you sell, you can get that from the scan data we discussed, and then we can tell you the why. And the why could be because in these 10% of stores, you have secondary placement, and it works pretty well. In some other stores, you're totally out of stock, or you have voids. So we can analyze the both sets of data and tell you, this is the stores that we need to go there weekly. This is the stores we need to go monthly or every quarter, right? So now we can start prescribing you the right stores for you. So utilizing the data is not all about collection, it's about the utilization and constant feedback and upgrading your store lists.
Thanks. That's a great help. So Diana, your product can probably live in different parts of the store. Is that true?
Yes, yeah.
And so what are some of the departments that you typically find yourself in? And how did you determine what was like the best place to be if you had to be in one part of the store?
I mean, when I started, I really had no idea that where the business was going, and I was doing something with chocolate. I assumed it was that my product was a confection. I went into Whole Foods and I went on the confectionery shelves, and it does fine there. And in natural stores like Whole Foods or Sprouts or something like that, we belong in confection. A consumer coming into a natural store is going to look in confection, for something like that for my product. But in conventional retailers, I'm pretty hesitant to go into confection because I'm sitting, next to Nestle's Crunch, Reese's Peanut Butter Cups, and sometimes there's not any other natural brands. I mean, it's changing dramatically over the last probably 2 years, where they are adding more natural brands. So I'm okay there now. But when I sort of talk to people in conventional channels, I prefer to be in packaged snacks. So in Kroger, we're in packaged snacks. And then we're about to go into a major retailer actually pretty soon in cookies, which will be a first for us. And I never thought of this as a cookie, but I really wanted to get into that retailer, and that buyer, said you're a cookie. And now now that I'm listening, people are really referring to them as cookies a lot, and it makes a lot of sense. And we are in some sets as cookies, but I'm really excited to see, how it does in different areas. And then there's some retailers that just didn't have an appropriate set and put me in gluten-free. And in a conventional retailer, I actually did extremely well in gluten-free because those customers had nowhere else to go, and they were going to gluten-free and seeking out my product. So it really depends on the store, and it's something I'm learning, and it's changing, and since COVID, it's changing.
And the ideal solution is to be in all three places, right?
Right, to be
That would be better for the store and better for you and all of that. And how about you, Billal? Like, what are you typically in the deli or prepared foods? Or again, you can probably live in a number of places, and so understanding like what's that best place, so you have a point of view when you're talking to a category manager that, based on your experience elsewhere, this is how they can optimize their business with you.
Yeah, so the flatbreads, they were almost always in prepared foods. But obviously COVID changed some of that because prepared foods kind of got decimated, and they brought a lot of house brands into prepared foods, and we went to different sections. But usually the breads are now back in prepared foods, but the sauces are usually the deli wall. So that being the deli wall, sometimes they'll merchandise the flatbreads in the deli wall. It might be two different buyers, but one section, So we do better in prepared food just because it's a higher volume traffic. Prepared foods, just like every day, people are just grabbing it. But we do good in deli wall too. So they're both two good areas that we do well. For us, a big thing of merchandising is, like I mentioned earlier, is trying to get the bread to merchandise with the sauce, because we obviously do better when people buy bread and sauce. And I think it makes the experience more enjoyable because you get the bread and the sauce, and then you become a regular customer of that. Okay, I'm going to warm up the flatbread and I'm going to eat it with the sauce. It goes well so together.
And Billal, I can jump in, and I'm sorry for interrupting.
Yeah.
Just, an idea that we have tried with brands, and that's what we're talking about. Merchandising can help, right? In Manzi, when you have your bread, you put a self-talker that says, if you like my bread, you're gonna love my sauces, go to deli to pick up one, right? So now you start driving consumers to the second section of the store that, you have to, since they don't have you all together. So that's just how innovative you can get into stores, guys. And that's for the audience here. You can try things.
Yeah, that actually works because we did that in Rayleigh's. Rayleigh's had us make tags. We had merchandise in Rayleigh's. The bread goes with the sauce, and then that really helped the velocity of both the bread and the sauce.
And so just to stay on that for a moment, like if you think about the range of stores you're in, Billal, like what percentage would have them merchandised together?
I would say about 60% of them.
And when they are merchandised together, what would you say would be like the level of velocity increase versus when they're separate? Does it sell 10% better, 20% better, that kind of thing?
No, I think it's like 40 to 50% better.
That's amazing.
Yeah,
that's like such a compelling story.
Yep. And I think it's because when people pick up the bread, they just naturally go, okay, I want a sauce with this. I mean, we do 60 farmers markets a week. So there are customers who just buy bread for sure, or just buy sauce. But I would say most customers buy a bread and they buy some sauce because they want to put sauce with bread, especially if they're having a party like Academy Awards, Super Bowl, Halloween. They're definitely buying bread and sauce. So.
That's a whole nother webinar. Doing 60 farmers markets a week. That's a lot of execution.
Yeah, it is.
I mean,
awesome.
almost every brand I've spoken to over the years, many of them have started in farmers markets. It's a fantastic way to get great intelligence. Certainly you're going from cost of goods to full retail, so it can be very lucrative. But most people are doing one or two a weekend. So that could be its own fantastic topic. So the next place I'd like to go is, we are in a omni-channel world, right? So set aside Amazon and e-com for a moment, but for many years, the well-worn path to market for most people was starting in natural and specialty. It was less expensive, more forgiving, good match with the consumer. You build a business there, you start to migrate into conventional grocery. You then eventually might go into Target, Walmart, Costco, et cetera. All that's been flipped on its head. And so I'd say today in 2022, premium, natural, clean ingredient products are mainstream, right? And so, and a lot of the key retailers, Target, Walmart, Costco, Kroger, others, they're reaching out to emerging on-trend brands like yourselves in saying, we want to be more accessible to you. We don't want to be your last stop, right? They see their looming battle to be with someone like Amazon, and they don't want to just be selling legacy CPG products at low prices. So, you know, how do you think about merchandising? And I really want to maybe go around and have each of you comment on how you think about merchandising in different channels. I mean, if you go into a mom and pop natural independent and you're talking to the owner, that's a whole different story than if you're going into a Whole Foods, which is a whole different story than if you're going into a Publix or a Kroger or somewhere else in terms of the level of person you're speaking with, how vested they are in that outcome of growing sales, et cetera. So maybe Diana, you can start.
Sure. I mean, so with our product in particular, you have to try. Like we get our customers through trial. As much as merchandising is really important. If somebody tries my product, I very frequently get a customer, a repeat customer. And ironically, I do really well, maybe even better in conventional, because our products are healthy, but they're not, they you know, you sort of get a customer coming into conventional and goes, ooh, too healthy. I don't want too healthy. And if you can get it in their hand and you get them to try it, they become so proud of themselves that suddenly that they like something healthy. I mean, this, you know, I'm not selling this as a health food. It's chocolate, but, and it's about 50% quinoa, 50% chocolate. But it's better for you. It's simple ingredients. It's definitely better for you, clean ingredients. And so those people really become a customer. And so I really think of sort of guerrilla marketing tactics to get trial in those stores and whatever it takes. And so it kind of goes to, for example, looking at something like Kroger, there was a period of time where we had seasonal products in there. I could see that they weren't turning like they should be. And I just did a guerrilla marketing, field marketing campaign, and I got a million, you know, I've got a bunch of people on the ground handing out coupons, handing out samples in store parking lots, because I didn't have time to figure it out with the stores. I just wanted to move that product. And I just got people in every single Kroger selling those products, you know, within a week, and got them going. And that's the kind of thing I've done, you know, whereas I don't necessarily have the data and doing it the right way. I mean, I sort of just watch things, and then I sort of do guerrilla marketing tactics.
So guerrilla marketing in the parking lot at the entrance of the store, in the store.
I mean, I had, you know, if I see a problem, I've got to move product. I mean, I'll just find a way to get people in parking lots handing out coupons, handing out samples. And if I can get samples in somebody's hand, I can move that product. And I get repeat customers, and I can track where the coupons are being used, where they're being spent, how they're being spent. And so, I you know, I'm listening to Drew, and I know that you should be doing it, you know, this very sort of precise way. I have sort of been like, you know, sometimes reacting to things and sort of maybe doing it backwards, but just, I have, you know, if I see a place where I have to get sales up, I'll do stuff just really quickly to move product.
That's great.
And I'll do stuff with, you know, with sampling and coupons.
And so Billal, how about yourself in different channels or different classes of trade? Are you doing different kinds of merchandising?
Yeah, I think just to touch on Diana's point is I had her product somewhere at like Expo West or something. And once I tried it now, I buy it all the time and I eat it with milk as my late night treat, so definitely. And Bolani is the same way. You have to try it. It's like a filled flatbread. We're kind of both of our products are its own category. So it's not something like you're like, oh, okay, I know exactly what that is. You kind of got to eat it and then you go, oh, okay, I could fit this into my life. I could warm it up. I could eat it for lunch. I could eat it for a snack, whatever it might be, So, but the consumer, once they try it, they kind of know themselves how they're going to use this in their daily life. And I think, like her, I use a lot of demos. So I've done hundreds of demos a week, thousands at one point. We used to do a ton of road shows in Costco in New York, Florida, Atlanta. I once traveled 40 states for Costco and we did 10-day road shows. Every 10 days we were in a different Costco, and I did that for a year and a half. We were one of the most successful Costco roadshows. It was very grueling and tiring, but it gave me a good perspective of who my consumer is and how far I could take this. And it really gave me the ability to give product knowledge to the customer about this. And I think this time around, I'm kind of focusing a lot on not just club stores, but in a natural channel, using a merchandiser to kind of give that product knowledge of this product. It's been huge for me because we sell really well. It's just about getting it on the shelf and getting the customer to understand what we're selling.
Got it. And George, you have an amazing perspective, right, across all the different brands you work with and support, all the different channels, classes of trade. So for the benefit of our listeners, how should they think about approaching different channels and what things that are, there's more flexibility or less flexibility, or how to optimize some of their activities when they're partnering with a firm like yours?
That's a great question. It's very important in your partner to advise you of what things are possible in the channel and the retailer you are in, and what things are not possible. Number one, I would say, is where the decision making is happening. In the moms and pop store, you have the decision maker right there, right? So you have another set of actions we need to take. When you go to Costco, the decision making is happening in the headquarters, right? So there is different actions you can take in the store level and be successful. So I would say you're going to get advice from the team you're going to work with, but always have in mind where the decision making is happening. At the end of the day, though, the presentation of the product at the store, at the shelf, is going to happen across the board about every different channel, right? And the question is how much impact your efforts are having. So some products in 7-Eleven or Whole Foods, they need to be there to support the brand at the shelf. Some others, you can try have some merchandising programs that are weekly. If you don't see the impact, then you have to decide how to allocate this budget to the stores that makes more sense, right? So I would definitely say, number two, measure the impact of what you're doing. I want to say, though, something that you mentioned in the beginning, and I think it is also important. You mentioned the omni-channel, and we had brands that they come to us with 22 million in sales in Amazon, and they were in 10 stores, right? And the brands right now, they want to have the same tools of measurement in the retail business. We really quickly realized that when you get in your first 2,000 stores, you have a story to present to the next 2,000 stores and to the next 5,000 stores. The problem is, how do you get a critical mass of accounts that can help you get there? So in the journey of a brand, we saw that the first years are very difficult. And that's why we decided to build here at Trax a brand growth platform. And the brand growth platform allows us to provide tools that the brands will utilize to measure impact of their effort. And also we included DSD component where we go to independent stores, we get the decision maker to agree, and then we even help you deliver the product to this decision maker. Our goal is to, through this brand growth platform, number one, to provide you the tools that you may have on your online experience as an omnichannel. Number two, to get you up and running really quick for your first 500 or 1,000 stores that you can grow.
Got it. So for all of our listeners out there in Zoom land, we want to invite you to submit your questions through the Q&A function below. We've only had a couple come in so far. So based on everything you've heard today, if there are still unanswered questions or things you'd like to get a little more detail on, please put them in the Q&A. And Carol, once we go through the questions, it might be great if you can help us review the results of the poll so that we can share that with the rest of the audience. But one of the questions that came through, and this is for you, George, is, are Trax retail merchandisers paid hourly, or are they more gig workers where they're getting paid per job or assignment or whatever?
The question is, what are we trying to get with this, right? Are we trying to understand how expensive is the visit or how much does it cost? We tend to pay our people, the highest. I would say we're one of the highest rates out there in the market. These people are your face in the store. And also we're trying to be very fair about how they utilize their time. So if a rep spend 30 minutes in the store, we're gonna pay them for 30 minutes. If the rep spend an hour in the store, we have to be fair with them and pay them for that. The answer is, how do they spend their time? 1 hour in the store. How can we make them productive? And that's again back to the technology. You need to have them certain tasks to perform, keep them productive and goal-oriented, results-oriented. So the answer is we pay hourly, and we pay even for smaller tasks based on the outcome as well.
Got it. Here we go. If everybody can see this, why don't we just shift over to this for a moment? So from the poll, what are the 1 to 3 most important retail activation outcomes you're seeking to achieve? And it looks like the biggest, most important one is getting into more doors. So getting more ACV. Many folks are looking to do ongoing merchandising. Some are doing more on demand when there are problems, reducing out of stocks, and the ability to influence shelf presence. Presumably that means, maybe a better position, going from the bottom shelf to the middle shelf or eye level, et cetera, and increased field team ROI and shopper engagement where you can, right? So we're coming out of COVID. More and more retailers are opening up the idea to doing, getting back to in-store demos. And that's a good thing. One of the questions that came in is a little bit off topic, but why don't we just take 30 seconds? And this is really for you, Diana. What made you choose your own manufacturing versus co-packing? But I'm glad you did, given the last couple of years of supply chain constraints, right?
Yeah, in retrospect, I'm glad I did. I had opportunities when I first started, and I had no intention of manufacturing. I tried to find a co-manufacturer, and nobody could make the product the way that I wanted it to be made. So I had these opportunities that were sort of immediate. In order to meet them with a co-manufacturer, I would have had to buy a lot of equipment, put it in their factory. I was afraid that my competitors, who are sort of these giants in the industry, would be in those same factories and start using my equipment, experimenting with new products using my equipment. And it just didn't seem like a good idea. And we probably jumped headfirst into manufacturing without really understanding how much was involved there. But again, if I had understood that, I might not have done it. And I'm so glad that I did. So it all worked out. That's
a great example of not being overburdened with knowledge, right? And experience. One thing I'll just add is, I've been doing this for quite a while, and for so long, investors would sit in front of founders and flatly say, we don't want our money going into stainless steel. And they would say it derisively, right? We want our money going into things that build value in the company. So brand building, innovation, distribution, et cetera. Well, that pendulum has totally flipped in the last year or two, where now you have your own facility. It's unbelievably, in terms of strategic importance of having higher EBITDA, being able to do innovation, having control over your destiny. So it's been a huge sea change in the industry.
Yeah, absolutely. I mean, when I first started doing this, people looked at me like we were absolutely crazy. And now it's getting me on store shelves because my story is simple. I don't have any out of stocks. I don't have any supply chain issues. You need it, I can get it to you tomorrow. You want a new flavor, you want an exclusive, I can turn it around.
Excellent.
So yeah, but it's been an exhausting couple of years figuring it out.
So George, we got someone to come back and ask you to kind of share a little more about are your workers gig workers or W-2 employees? So I think they're really looking to pin you down on this.
Yeah. No, that's interesting. I believe that the merchandiser being successful in the store doesn't have to do with a labor agreement. It has to do with what actions they do in the store. That's how we are very different with everybody else in the store. We empower the people with data, with actions that will drive data, and then we measure them. That's very important. Diana mentioned that in the beginning. How do you manage these people? There are companies out there with hundreds of people out there merchandising product, but how do you manage them? How do you see that they're achieving their goals? How do you know they're successful in the store? That's what's the difference that we bring. We make these people being successful in the store by letting them know what are their targets, what are the goals, and then what they have to achieve. We have a blend of W-2 employees, of part-time employees, and I would say we do about 100,000 visits a month out there. And these people, they get to represent so many good brands, even in a daily basis, in hundreds of stores and thousands of stores.
And I would just add, you're in a business where results speak for themselves, right? So it's really, that's what counts at the end of the day. I mean, assuming you have people who show up, who do a good job, who get the results the brands need, and they're able to report back and communicate so everybody understands what that, return on investment is. So Billal, we got a question for you, which is, you have your sort of your flatbreads, your stuffed flatbreads and your sauces, and ideally they're merchandised together. And so who do you start with when you go and have a headquarter call and you're meeting with a category manager? Who do you usually try to work with first and make that case of trying to merchandise these together?
So usually it'll be however I got in contact with the store, whether it be through a broker or I met them at a food show or I just came across them myself. And then once the buyer, most of the time the buyer will be able to take both, but obviously sometimes they'll have to loop in another buyer and I'll have to have a separate meeting with, sometimes together, but sometimes it's separate. And then they will decide like, either you take this whole line on, but they'll kind of share the category, or they'll say, we're going to buy you separate and we're going to buy you separate. Or a lot of times they'll say, I'm just going to buy the bread or I'm just going to buy the sauce.
I see. Yeah, I mean, the unfortunate thing is when the store isn't getting the results they could because of they're being siloed or otherwise too bureaucratic or small-minded. And unfortunately, that happens too. But
Totally.
when you, especially when you're working with smaller independent retailers, they can see the value of getting those incredibly incremental sales.
Totally.
So we're coming near the end of our time. I don't see any additional questions here. Would any of you like to make any final comments, words of wisdom, things to leave our audience with? Diana, I'll start with you. And the answer can be no. You've said it all. You've left it all on the field.
I'm not sure if I have any words of wisdom. I mean, I think you just have to sort of just be really in touch with what's happening with your product at the store level, figure out which stores you have to succeed in order to get to the next level, and then keep using that is a stepping stone to move up and succeed where you have to succeed and spend the money where you have to spend the money.
And what I heard from what you said earlier is like doing what it takes, right? So if that means, doing the guerrilla marketing, getting out there and hustling and, doing things a little outside the guardrails, that's what you have to do sometimes as an early, fast-growing company. Billal?
I think it's just kind of doing what it takes, and I think when you're gonna, if you're a small brand, I mean, we bootstrapped it all the way, and I've had no investment, and we self-manufacture, which is incredibly difficult. I think learning where your ROIs are and how to get those turns. And if you're going to use a merchandiser like Trax, I think it's good to start. You can start with a small campaign, and they're pretty flexible. And you can see, and if, I've been in this business long enough that if things don't work out, then, they don't work out. It could be a broker, a merchandiser, whatever it might be, either they're going to make turns or they're not. I mean, the proof is usually in the pudding.
Got it. And George, any final words?
Yeah, I have to say, I think the learning today, and especially after Diana told us about her approach on going and become the manufacturer, is set up your strategy and then follow the strategy even at the early stages. So what is your strategy for merchandising? Find the right partner that can be the partner of the future, the partner that can help you with a platform and making decisions based on data, and work with them. Don't discount the early steps with bad merchandising or with solutions you don't feel they're going to be scalable in the future. Build early your strategy and stick with that.
Excellent. And for my final, I'm just going to do a short infomercial on my seminars that I'm bringing back to Boston this December. We took a hiatus during COVID because we think so much of the magic is in the interpersonal relationships and connections that get created. But we're going to be doing a 2-day sales seminar, December 13 and 14. We're going to have John Raish from UNFI, the Senior VP of Category Management and Marketing. We'll have UNFI next. We're going to have Ahold, which is Stop and Shop and Giant Foods. We're going to have Fair, Spins, Grovara, Instacart, experts on Amazon, Walmart, and Whole Foods, a leading food service and premium C-store broker, and led by myself and my friend John Majori, who's a broker, where we cover things like trade spending, working with distributors, brokers, pricing, margins, and effective sales calls. And then on the third day, December 15th, I'll be doing a seminar and networking event on financing with Mike Bergmeyer from Whipstitch Capital. And we'll cover deal structure, valuation, term sheets, but we'll also have the Angel Group, City Capital, Loft Growth Partners, RCV Frontline, Mondeleza's Snack Futures as a strategic. We're going to have Walden Mutual Bank. We're going to have Albertson's Venture Group, Karen Ivanis Rogers, and we're going to have Keith Kohler, who's an expert on all things debt. So feel free to go to naturalconsulting.com and see the complete agenda. So Carol.
Well, thank you all. Thank you so much for the wisdom that you've shared today with the audience. And Bob, we will include the links to the seminars and the follow-up email that will contain the recording and additional resources for all of you to, I guess, activate your brand in retail. And a lot of useful insights were shared today. So thank you to each and every one of you for taking the time today to help and support the emerging community of CPG founders. It's not easy, but with the right partners, with the right mindset, the right data, and the right tools, you can get there. But again, thank you all for joining us today. And we will be back next Tuesday, November 15th at 4 p.m. Eastern Time with our third session, partnering with co-manufacturers for scaling success. We know it's a hot topic. It's a major pain point for many founders out there. So be sure to sign up for the session. We will reveal some of the best practices to identify the right co-manufacturer and establish mutually beneficial partnerships with them, as well as scale your production in a way that supports your business growth and expansion goals. We will have food industry expert Kathy Robinson leading the session with branch food mentor in residence, Bill Skeens, and founders Prabal Chaudhry, president and founder at Brave Good Kind, Kamal Jarrett, founder at Hillside Harvest, and last but not least, Josh Harris, who's the CEO of Distinctive Foods, a 40-plus-year-old manufacturing company for baked goods based in Illinois. So it's going to be a very rich session. Hope you can all join us and sign up, and we'll see you then. And again, thank you to our amazing panelists today for all the expert advice that you shared. We wish you all a wonderful evening, and we will reconnect very soon. Thank you all again.
Thanks for having us.
Thank you.
Thank you. Thanks for having.